Hey there, everybody. Thomas with Basecamp Trading. It is Thursday, June 18th, and we're going to talk a little bit about the S&P here and about avoiding choppy trades. One of the ways we do that. Before we dive in, make sure you hit that like button and subscribe to the YouTube channel if you haven't already done so. But without further ado, let's go ahead and dive in here. First off, the S&P. So we avoided trading the S&P all day today. We've just been sitting on our hands with it. And then trading room, we said, hey, we're leaving it alone. We had a couple really good trades, trading the breakout in Spotify, trading the breakout in ZS, the breakout in Salesforce CRM. They worked out well for equity trades, but futures, we were in large part just sitting on our hands. And this is why. On a 120-minute price chart, the market is trading inside this descending channel or descending wedge here. We have well-defined support down at 3063 that we tagged last night, and then bounced up, and we've just been pivoting around inside of there. We have a trend line going down across the highs for resistance. Now, when we are inside of compression like this is where most traders end up losing money. So we're avoiding trading there. Then inside of that, we have compression again on the 30-minute chart. You have a pennant pattern. Now we have a bullish inflection here on the 30s, suggesting this is going to start pushing higher. But keep in mind, it's still inside compression. We have a narrowing range where each pivot high is lower than the last pivot high, and each pivot low is higher than the last pivot low. So our range on the day is getting narrower and narrower, or compressing, which means we don't want to mess with it until it kind of breaks outside of this compression zone. And it may not happen today, it may not happen tomorrow. And the thing you want to keep in mind with that is, again, when we're in compressing, when the market's in a compressing environment, a lot of times traders will just get chopped to pieces because you never get any follow through. Now the same thing applies not just to the S&P here and just to futures, but to everything. You can apply the same logic to equities, for example. Spotify is a good example of a breakout trade where we were compressing like this, and this is why we bought yesterday, is we were in compression. We ended up coming up and popping through the resistance, breaking out of the compression pattern. So we're not trading in here. We trade as soon as we break through that resistance, and we were in it for the rally today, which played out beautifully. But overall, keep an eye on whether or not your market is in compression or in expansion, and avoid trading inside those compression patterns whenever you have a narrowing range or whenever you have equally high highs and equally low lows forming a channel. But that's it for today. I hope it helps. Once more, make sure you like and subscribe. And until next time, everyone, happy trading.